Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. If you'd like to know the absolute latest on any commercial real estate related topics, check out our on-demand show podcast. For example, we recently produced a show on buying and selling notes in distressed real estate featuring interviews from the IMN Special Assets Conference. Last week, we interviewed the national presidents of some of the major associations like BOMA, SIOR, and NAIOP. There are lots of interesting shows to choose from. You can access them on your computer, tablet, or smartphone. Just visit iTunes or the show website, commercialrealestateshow.com. Well, today we're exploring the student housing industry. Please welcome my next guest, Ted Rollins, co-chairman of the board and chief executive officer of Campus Crest. Campus Crest is a leading developer, builder, owner, and manager of high-quality, purpose-built student housing properties located across the country. Ted Rollins, welcome to the Commercial Real Estate Show.
Thanks, Michael. It's great to be here.
Well, we appreciate you joining us today. And the student housing market has seemed to be a healthy market. Where is the growth in the sector?
Well, Michael, it's interesting. You know, since the very beginning when we started the company, we looked in this market and basically we broke it into a couple of segments. One segment was what we call the flagship schools, and the flagship schools are those schools that are the name brand in the state in which the state school system is. So, for example, in Georgia, it's University of Georgia or Georgia Tech for the most part. And that state school system has many other schools that we call non-flagship schools that are equally as good. The diplomas are great. It's a great value for education. In Georgia, for example, you've got University of West Georgia in Carrollton. You've got Georgia State in Milledgeville, Georgia, and so these are what we call the non-flagship schools. And we believe that the growth, and it's proven out by the numbers, in the student housing sector is in these non-flagship schools. So as a focus, our company focuses on the non-flagship schools, which is roughly about 67 to 70% of our portfolio. And then what we like to call is the large schools in a small town, which would be the flagship schools, but mostly in small towns that are things like Penn State, for example, where we have a project opening this summer. But most of that growth is really being driven by value because if you look at the schools, these non-flagship schools, they generally tend to have a better tuition value proposition. And they're about 17% less in tuition than the flagship schools, and they're almost by a factor of 3 times less than a private alternative. And so we've seen in this economy and the kind of the new economy, people focusing more on these non-flagships due to their value and the quality of education that the students are getting. It's an interesting dynamic shifting in our country.
No, that's interesting, Ted. So what else is creating the growth in this sector?
Well, another thing we've seen, Michael, is that if you look at this sector and try to understand what's driving, what are the underpinnings of the growth, you've got several factors that are going on here. You've got more kids as an absolute percentage graduating from high school. So the Department of Education statistics show that there's more kids actually on a percentage basis graduating from high school. So those are graduation rates. Of those graduating seniors out of high school, there's a higher percentage of those kids going to full-time college. And then if you look at the college average length of stay, kids are staying 5 years for the most part now. They may not be able to get a course that they need. They may just have a lighter course load, but they're staying longer. So the average stay is right around 5 years. It's moved up some. And then finally, which is really important and we focus on, is this international student enrollment, and that has grown tremendously over the last 10 years. And that's not only here; it's in Canada, where we just purchased a property in Montreal, as well as other markets like the UK and Australia. There's a big demand on an English-speaking education. So those are kind of the things that we see first and foremost as driving that growth.
Well, that's great because the sector seems to be healthy and has been healthy. What about student loan rates? If those adjust, how could that affect the sector?
Well, I talked about that the other day, and if you look at the student loan business, I guess as a kind of whole, or if you look at the enrollment of our schools as a whole, roughly 47 to 50% of these kids have no loans. So that's part of the story. Okay, so a lot of them don't have loans. The second part of that story is that if you take the default rate on student debt, and it's just based on that portion of the demographic that does have the loan, that's about 7%. Now, if you take it on the broader student population, it's about 3% default rate. Now, if you look at why that default occurs, it's really because of the fact that most of this is being driven by students that don't graduate with a college degree. So, taking back to your original question, at the rates that we were underwriting student loans at, which were pretty low, and you look at the default rate, basically what the problem is that you don't have enough interest to cover your default rate, and so it's not a sustainable situation. So by increasing the interest rate, and I think what they were talking about is like 300 basis points. Yes, it's a lot given the relativity of that to the current rate. If you look at it based on the way we see things and the student loan side of the equation, a lot of the kids that go to our schools have an average tuition of about $8,000 a year, and some of them have they work, some have partial financial aid, so it's likely that those kids are going to graduate with $50,000 in loans. There's a major difference graduating from college, your wage earning capacity as well as unemployment. It's just a tremendous difference as you get up to a student graduating from college. So you graduate from college, you have a $50,000 loan. What you're really talking about is a 300 basis point increment cost to that student, which is roughly, on a $50,000 average outstanding, $1,500 a year. It doesn't sink the ship. And what it does, in our opinion, is it really gives a sustainable approach to the student loan business, which will continue to have that in place, which will continue to help kids get education. So it's not way out there. It's a pretty good plan. People are focused on the long term. I think it's a positive long term for our industry.
Okay, so it could be a positive because it keeps student loans available for students. Well, that's interesting. And student housing has changed a lot in the last several years. How has it changed, and what have you done there at Campus Crest in that regard?
Well, it has changed, Michael. And what we've noticed is that a couple of things. We have several brands that we operate. We operate a brand called Copper Beach, which is more of an independent townhouse product. We purchased that earlier this year. It's an excellent product for seniors and graduate students. And then we have our undergraduate program that is really focused, and it's called The Grove. And The Grove has a lot of amenities. It has certain things that the kids like to do. But the number one thing, that we think it's all about with these students, and we think that we've done this, and I think we lead the industry in it, is the Residence Life program. So engaging the students into our program called SCORES, and SCORES, it really stands for Social, Cultural, Outreach, Recreational, Educational, and Sustainable. And we take these students that are coming with us, and while they're getting their degree, we're creating a social infrastructure for them. They're engaged in our communities. We have activities ongoing, anything from volleyball games to community outreach. We've got quite a broad array, and that's one big thing, I think, rather than just throwing them in an apartment, let them kind of be on their own.
Well, that's extremely helpful, Ted, and we said we wouldn't keep you long. Thanks for joining us today. We appreciate it.
Okay, thanks, Mike.
For more on Campus Crest, visit campuscrest.com. We have a lot more in store for you on the student housing industry. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by your friends at Bull Realty, France Medio, Atlanta Office Liquidators, and Wiseman, Nowak, Curry, and Wilco. For more information about these companies or to access additional show podcasts, videos, or blogs, visit commercialrealestateshow.com.